evening, everyone, and welcome. My name is Alex Hansen, and I am the Executive Director of the Friends Collaborative, and I am so glad that all of you are here tonight. Like many of you, this will actually be my first official information session, as I just started at the beginning of this month, but I could not be more excited to be here. I hope that tonight's presentation will be very informative and leave you eager to participate with this wonderful Friends Collaborative. Your speakers who will guide you through tonight are our co-clerks of the collaborative, John Gilliland and Jeff Markovitz. John is a parent, volunteer, and board member at Plymouth Meeting Friends School and has experienced firsthand the tremendous impact that Quaker education has had on his children and his family. His volunteer work with the Friends Collaborative is guided by a deep desire to ensure more students and families are able to participate and benefit from all that Quaker education has to offer. Jeff has run a local printing company, ABS, for the past 16 years, and his interest in Quaker education is based on his personal experience of attending Germantown Friends School, which is also my alma mater. When it was time for his 3 children to attend school, they were enrolled in Quaker schools. Through his volunteer work with the Friends Collaborative, he wants as many children as possible to have the same transformational experience that he and his children have had. Following the presentation, there will be a question and answer session. If you have any questions at all during any point of the presentation, please type your questions into the chat window. At the end, we will circle back to address all of these questions, and if there's time, we will then open the floor for live questions. As Pam had said, this presentation will be recorded and it will be made available to everyone after. So without further ado, I will now pass it on to our first speaker, John Gilliland.
Welcome tonight, everyone. Thank you for being here. We really appreciate it. We're going to go through a standard slide deck, and as Alex suggested, we are collecting questions. You can just use the chat function to collect questions throughout the process, and we'll circle back and do live answers as we go through it. So the question of the day is, we all pay taxes, but which would you prefer? Just to pay your taxes to the state of Pennsylvania or direct your taxes to fund need-based scholarships? And that's what this is all about. The state of Pennsylvania gives you a method to be able to direct your taxes that you owe and that you're going to pay in any case. The mission of the Friends Collaborative is to provide funding, pretty simple, to make Quaker education affordable for more families. We have 22 member schools, all Quaker schools throughout the state of Pennsylvania. You can see the list here. We do not currently have any pre-K only schools, but we do have the remainder of the Quaker schools in the state of Pennsylvania. Our first year of fundraising was 2016, and just to give you an idea of the impact and the amount of funds that we've been able to raise since 2016, we've raised a little over $15.5 million. As I said before, we have 22 member schools that we're sharing the funds with, and so far we've awarded approximately 1,700 scholarships throughout our schools. So the main thing we want to talk about today are the EITC and the OSTC program. And the key here is to understand that this is not the, this is EITC, it's a state program. It's not the Earned Income Tax Credit, which is a federal program. That's where we usually get a little bit off. This is just a state program run under the Department of Community and Economic Development, originally as an incentive program to encourage businesses to invest in schools. And that's the intent of this entire program. Credits are available to eligible taxpayers contributing to scholarship organizations, educational improvement organizations, and or pre-K scholarship organizations. And that's just a name for groups like our schools, like our pre-K schools. An EIO, or an educational improvement organization, is something like the YMCA or an after-school program. They have a separate group that can receive these kind of funds too. The great thing about this is that this is a tax credit for participation, a 90% tax credit for the participation. We only do this with the 2-year program. So you agree for 2 years to participate at the same amount. And for that in return, the state of Pennsylvania will give you a 90% tax credit. There is a separate program. We don't participate in it. That's a 75% tax credit. So you can understand why we do the 2-year program. That's a 1 year for the 75. We use a legal entity, a legal structure that the state has set up for us called special purpose entities. It's created as a way to allow individuals and corporations to participate in this program. So you'll hear us use a lot of acronyms. I've already thrown out EITC, OSTC, DCED, SPE. Just stay with me. We'll try to get to those and try to make them make sense. But for the purposes of tonight's program, the SPE is a special purpose entity, and that's what we do. Excuse me, there we go. So what is an SPE and why is it so important? An SPE is a legal entity used to apply for EITC credits to offset a PA liability. The sole purpose of this structure is to receive funds from participants, then apply for the credits and donate the aggregated amounts to approved scholarship organizations. The great thing about it is both businesses and individuals may participate. We always talk briefly here about what the difference is between a tax deduction and a tax credit, and I'll let my co-presenter Jeff Markovitz hop in and talk about this for a second.
Sure. Good evening, everyone. Thanks, John. You know, a couple of things I do want to highlight as we get into the mechanics of this is that, one, keep in mind that of the $15.5 million you saw that we raised, 100% of that gets donated as need-based scholarship. Because we operate almost entirely as a volunteer organization, we're able to ensure that 100% of the money goes to need-based scholarships. The second thing that I'll mention that's really cool is that, you know, this program is an explicit part of the tax credit law, and it's one of those rare occasions where the state is saying, like, that's fine, you don't have to pay your taxes, you can send it somewhere that you really care about. And it's really important in this to know the difference between a tax deduction and a tax credit. The tax deduction is something that we're all familiar with. You know, you make a charitable donation and it reduces your total taxable income, and so you save a little bit of money on the cost of the gift. Now, a tax credit, on the other hand, is really just like cash, right? When you get your final tax bill, a tax credit is what you can use to actually pay your tax bill. So it's dollar for dollar, and it's way more powerful and way more valuable than the tax deduction that you're used to dealing with.
We're going to run through. Sorry. We're going to run through a basic example. I'm going to let Jeff do this, but just want to set it up for you. As a Pennsylvania resident, if you were to contribute $10,000, you would receive a 90% tax credit for $9,000. And you'll see for just a second why we picked $10,000 in just a minute. You'd also be able to take a federal tax deductible deduction. This applies to the extent that you itemize and exceed the standard deduction. We're going to talk mostly about the state deduction, but we are, for some people, the federal deduction may be able to get in there. So Jeff, I'm going to turn it back over to you.
Sure. So the thing that's really important to remember is that the state piece, and you can flip to the next slide, John, the state piece, the state program operates completely independently of the federal program. So we want to focus on the state benefit first, because that's the majority of the benefit that a donor gets from this program. So if you have taxable income in Pennsylvania of about $300,000, the amount of tax you owe will be $9,000. As John mentioned, you'll get a 90% tax credit. And so what the strategy is in this case is you make a gift of $10,000. That $10,000 gift gets you a 90% tax credit. So you zero out your PA state tax liability. you will now owe no money to the state of Pennsylvania, and the $10,000 will fund a need-based scholarship. Now, the difference between the $10,000 that you donated and the $9,000 credit that you received is $1,000. That is your out-of-pocket cost on the state level. And so you can see how powerful this program is, because for every dollar you donate, you fund scholarship worth $10. And that's one of the best philanthropic propositions that you're going to get. So that's the state piece. Now, if we think about the federal piece, your out-of-pocket cost was $1,000. You donated 10, you got a tax credit of 9, that left you $1,000 out of pocket. Assuming a 33% average tax rate for a person who makes $300,000 a year, or a couple, that would be an additional tax deduction, not a tax credit. We're back to the traditional tax deduction model of $333. So the net cost out of pocket is $700, $670 to be exact, but $700 funds a $10,000 scholarship. So that leverage goes from $1 funding 10 to $1 actually funding 14 in the case where you get the federal benefit. Again, it's an incredibly powerful program, and a huge philanthropic impact can be made by participating in this program.
A couple of caveats we just need to point out here is that tax credits must be applied to the tax liability of the donor for the tax year in which the contribution was made. It cannot be carried forward or carried back. They are not transferable, nor are they refundable. You don't use them, you lose them. The federal deduction calculation only applies to the extent that the taxpayer itemizes and exceeds the standard deduction. We're not accountants, we're not attorneys, but please consult your tax professionals for specific tax treatment advice. Typical participants are clearly those who support scholarships for education. It's someone who can commit to a donation, consistent donation for the 2 years, and you're willing to sign an agreement and a joinder with the SBE authorizing us to aggregate the donations for the purpose of supporting education, and then passing the tax credits back to you as the donor. Our minimum amount is set by us at $3,000. Upon state approval, and each of these are approved by the state, by the Department of Community and Economic Development, each entity, when an entity is approved, it's open for 60 days. We have to fill it within those 60 days, and that's it. That's all that's available. So there's a very limited time window. We do have funds available now that are already open, but that's one of the reasons we're doing this tonight. I just want to let you know there's a limited amount of time available. Allocation is determined by the collaborative. The collaborative works as a group to determine how these funds are shared. There is a sharing formula. The bottom line of the sharing formula is that no school receives less than 75% of the funds credited to them. The remaining funds are shared amongst the member schools on this previously agreed upon model.
I'd like to emphasize one point that John made there. We have a very limited time to fill our allocation of credits provided to us by the state. Historically, we have almost always been oversubscribed. The credits are in a limited amount. Not only are the credits that are allocated to us oversubscribed, but statewide, this program is subscribed every year. So if this seems like it's something that's of interest to you, it's important that you don't wait and that you start the process as soon as possible.
Absolutely, Jeff. To talk to your development officers and let them know that you're interested. You can talk through amounts, you can talk through timing. It's very important that they move on that as quickly as possible. This is something that we want to talk briefly about, especially during this past 24 months. We cannot be responsible for the timeliness of the state's ability to refund make refunds. The Department of Revenue, of course, is involved in this, and we've seen some slowdowns during COVID, but we just want to point out that we can't do anything to speed up the process other than make sure that the state has all the necessary information they need to move these through in a timely fashion. There may be cases where the second year payment may be made prior to the receipt of the previous year's tax credits, refunds. So you may be out of pocket for a short period of time, 2 years worth. It's just something to consider. We can talk through when that's likely to happen and when it's less likely to happen. Your development officers can help you with that as well. It's not a major deal, but we like people to be aware of the possibility if you are sensitive to your refund status. The Friends Collaborative payment due dates are based on the state's timelines. So the state, as we said before, approves these, and then the date of that approval sets the due date, which is 60 days after the date of the approval. So if you're interested, clearly the first thing you want to do is talk to your development professional. Have the conversation, say, yes, I'm interested. What do I need to know? What do I need to get from you? You're going to make a request for a specific amount. If the credits are available, which they are right now, we can hold them for you. We can give you the necessary paperwork. You have a few weeks time to get that paperwork back to the schools with a check made out to the entity, and then can be completed. You're in the process. You're running right through it just like we should be. In March of the following year, you're going to receive, so if you participate now in March of 2022, you're going to receive a statement from our accountants, a K-1, that's going to be issued. And that's going to be put with your taxes. You're going to put that with your taxes to make your filings and to receive your credit. Renewals for entities that we're in right now begin in August for next year. So the second year would be due mid-August of next year. Obviously, if you're interested in participating, you might be interested in helping. We, as Jeff said, 100% of our participation, that $15 million we talked about before, has been donated. And the reason that is because we're all doing this because we really want to make sure that Quaker education is an important part of what we do in the state of Pennsylvania. Everything that we do is being done pro bono, and we just want to make sure that everybody understands that we're very clear about making sure that we're giving that. But obviously, we want you to help if you're interested, if you like it. We've got be able to put you to right to work. But be a connector if you know individuals or businesses who also might be interested in this. And understand, be sure to spread the word and understand the program. Obviously, we'd love to have you involved. We have as I said before, this is all being done through the gifts in kind, especially from our accountants and from others. So we'd like to spotlight those folks. And we'll take questions now, Alex.
Can I say one thing before we do that? I just also wanted to lift up that it's important to know that we do this in partnership with Friends Council on Education. And they're a great resource for the work that we do. And, you know, all of the funds that we donate are donated to Friends Council on Education, and from there are distributed to our member schools. Go ahead, Alex. Sorry about that.
I can stop the share.
Actually, it'll be Dana who will be
Thanks, Dana. Sorry.
Q&A. That's okay. If you would like to ask a question, you may send your chat questions at any time during the presentation using the chat window. Address it to everyone so that we can make sure we record your question at the end of the evening. The first question we have is, what is the process for applying?
So the process for applying is contact your development director or Alex or John or me or your head of school and let them know you're interested. You want to tell them the amount at which you're interested in, and then we will supply you, you'll be supplied with the paperwork that you need to fill out. So you fill out, I think it's about 3 or 4 pages of the document that you need to fill in, and you return that to your development director with your check. And that's how it happens. And it's pretty simple and easy to do.
The next question is, can you give to multiple schools that your children may attend?
And the quick answer is yes. On the form, there's a place to indicate how you would like your funds directed. So there's multiple schools can be. We often have folks who have want to give to multiple schools.
The next question is, what is the minimum state tax obligation and minimum donation amount combination that can be used for this?
Say that one more time, Dana.
What is the minimum state obligation and minimum donation amount combination that can be used for this?
Right. So the minimum donation is $3,000. So 90% of $3,000 is $2,700. So if you owe the state at least $2,700, you will qualify to participate as a Friends Collaborative participant. That's a floor that we set as a collaborative, and that equates to about $88,000 in taxable income in the state of Pennsylvania.
The next question is, why is it 2 years and not 1 year?
That's set by the state. It's the way the program is set up. It's our choice to use the 90% credit versus the 75% credit, which is a 2-year guarantee. You make a commitment that you're going to participate at the same level for 2 years.
And we opt into that when we apply for credits to the state. We tell the state that we're going to participate for X dollars for 2 years, and that's a commitment we're making. And because we're making that 2-year commitment, that's why they give us the 90%. We, as John said, we've elected not to participate in the 1-year part of the program because the tax credit is only 75% and it's really not as beneficial.
The next question leads further into that. I understand the membership is for 2 years. Does the contribution have to be the same each year?
Generally speaking, yes. There are cases where we will make exceptions to the 2-year requirement. Please contact your development person if there's a circumstance. For example, someone who has a capital event, like maybe they sold a business and they have a big tax liability. Maybe they have variable income because they have variable compensation in their employment. So we will make exceptions if given a specific rationale, but those are approved on a specific individual basis. So if you have a situation that you'd like us to consider, please let your development director know, and we'd be happy to consider it.
The next question asks, what are the income cutoffs for applying?
Well, as Jeff pointed out, the minimum is about $100,000, a little bit less. The upper end, there's really no upper end. So there is a limit in that each entity can only go up to $750,000 worth of credits, which equates to $833,000 donation. But there's really no upper end as long as we have capacity within multiple entities. So
and we've never had a gift that's exceeded $833,000, but we are up for the challenge. So if you all can bring us that challenge, we will rise to the occasion. I promise you we can do it.
Next question is, when is the magic donation window for 2021? 60 days started on what date?
Yeah, so we have 4 entities that are approved right now. The window on those specifically started in September 22nd and September 14th, so they'll close mid-November. That would be the 60 days. We're awaiting approval on 3 additional SPEs that we have been involved in the past that have we've not received those letters yet. And we did apply for additional credits this year. We haven't heard on any new credits, although we're hopeful to receive some new credits this year.
So the previous ones the previous ones we've participated in that have not yet been approved yet by the state, it's highly possible they've already been approved by the state, but the state just hasn't notified us because they notify us by mail. And so, you know, we won't know. We've been in contact with the state. We won't know. You know, I could get the letter tomorrow, and it's highly possible that it's been out in the ether for 20 days. And so we only have, you know, 40 days left. So it's very hard to say exactly when all the dates close. And because we've also, as John said, applied for new credits under different under different SPE names, you know, we could potentially have rolling approvals between now and June. So it's really important that if this is something that speaks to you, that not only should you try to take advantage of the currently available credits if you can, but also it's good to be ready to go. If you can't participate right now, it's good to have your ducks in a row, get all your questions asked, consult with your tax professionals, so that, let's say, when an approval comes in February, then you're ready to participate. Whoops.
And as Jeff mentioned, we typically the last couple of years we've had multiple SPEs approved in the fall of September or so, September and October, up until November. We've had approvals, and then we have approvals for the next calendar year starting in January. So you get January approvals, and we've had those go as late as March and April to fill out the fiscal year. So there really are two sort of typical flows, and those flows tend to be early September, mid-September approvals for most that we're involved in for some, and then another second round for the following year's tax credits in January, again for those. Again, it's the same thing. It's still a 60 days from the date of the letters, the date on the letter that we received from the Department of Community and Economic Development.
The next question is referencing the example provided for the $10,000 donation and asking about additionally how donations are treated for federal taxes.
Sure, I'll take that. So the state portion is completely excluded from your federal taxes, essentially. That operates independently from your federal taxes. The only thing that can potentially come into play on your federal taxes is the difference between the amount you donate and the credit you receive, because that, in fact, is a charitable donation that you can claim on your taxes, especially if, you know, everything aligns, like if the SALT limits come into play, you exceed the standard deduction, and you itemize, then you can take that differential and apply it just like you would any other charitable gift, just like your annual gift, and put that on your tax return. So in the example we give, it's that $1,000 difference. You would put that on your Schedule A of your tax return, just like you would for any other charitable donation you make, whether it's to American Friends Service or Arch Street Meeting House or to the annual fund of your school.
This is a question related to which we're already discussing, is how does the difference, the $1,000, get documented? So
you will receive a PA K1 form that is the SPE is an LLC, and it issues a K1, and so your tax benefit as a pro rata share of your ownership gets passed back to you on that document. And your accounting professional, your tax professional, will be able to use that in order to file your taxes correctly, to both claim the PA state tax credit and get the state benefit, as well as get the federal benefit if you qualify for it.
The next question is asking, what are the 4 entities that are available?
So, John, I'll just jump in there and say the names of them are really not relevant. We name all of we probably have about 20 of these things now. Some are active and some are inactive. And we try to name them, you know, give them good Quaker names like Peace and Equality. And, you know, one is named Mott for Lucretia Mott. So they have all kinds of names like that. And you'll just be assigned to whichever one makes sense for your participation level at the time that you make the request.
Next question is, if the state tax has been deducted from paycheck, can we still get the state tax credit through this mechanism?
Yes, I thought you were going to answer, John. Sorry. Yes, absolutely. So the credit is the same as cash. It's the same as cash paid into your tax account at the state. So if your if your withholdings, if you're a W-2 employee and your withholdings and the credit create an overage in your tax account at the state will send you back a check. So you will receive a cash refund from the state. Similarly, if you are 1099, if you have your own business or you're a 1099 consultant of some kind, one of the really great advantages of this program is that you can adjust your quarterly estimated payments to the state based on this. So since I started participating in this, I never pay quarterly estimates anymore, and it's great. So so that's an advantage for anyone who's a 1099. Before we close, the last thing that I'll share from John and me is that we are available. We're available to speak with anyone individually about their specific situation. We're available to help you and your school and your development person in any way we can throughout this process. And we would also like to ask all of you not only to participate, but also if you know people that might benefit from this program and might like to participate, please send them our way, because that's really how we get a lot of our growth, is for participants in the program who refer others to the program. So I want to thank, from me personally, I want to thank you all for coming out tonight. It's really an honor to be able to speak to you.
Yeah, thank you very much for being here tonight, folks. And obviously, if you have any questions, just direct them to us. As Jeff said, you're more than welcome to call us. We'll be happy to talk to you, or just call your development person at your school. Thanks.